Healthcare transformation is often discussed at a national level, policy changes, reimbursement models, and federal programs. But in reality, the most meaningful changes in healthcare happen within the markets. They happen at the level of states, health systems, and local care delivery networks. That is where financial pressure is felt. That is where operational decisions are made. And that is where strategy actually plays out. Pennsylvania offers a particularly interesting lens into these dynamics. It is one of the largest hospital markets in the United States with a mix of major academic centers, large integrated health systems, and rural hospitals operating under a very different financial reality. And what makes this market important is not just its size, it's the combination of forces shaping it. Increasing demand for care due to aging population, workforce constraints affecting operations, and there's a shift towards outpatient delivery models. And there's also a growing pressure on hospital margins. These are not isolated trends, they are structural shifts that are redefining how hospitals operate. Hello, this is HealtheNomics, and I am Dr. Ayoub Ashraf. Today, we would have a strategic deep dive into the Pennsylvania hospital sector, where I would analyze the economic realities, shifting demographics, and structural forces driving the market. We will unpack the key challenges health systems are facing and translate these trends into what healthcare leaders should be thinking about next. The Pennsylvania hospital sector today represents a market of roughly $69 billion in annual revenue. That scale alone places it among the larger healthcare markets in the country. But what is more important than the size is how that activity is distributed across the state. If we talk about Eastern Pennsylvania, Philadelphia County alone contributes a significant share of hospital revenue, driven by larger academic systems such as Penn Medicine, Thomas Jefferson University Hospitals, and Temple University Health System. These institutions anchor complex care delivery, research, and specialty services for the region. While in Western Pennsylvania, Allegheny County represents a different kind of market dynamic. Here, the competitive landscape is shaped largely by the presence of UPMC and Allegheny Health Network. This is a market where large integrated systems compete directly, influencing referral patterns, pricing dynamics, and access to care across the region. And when you move into central Pennsylvania, the structure shifts again. Systems like Penn State Health and expanding regional networks are playing an increasingly important role in serving both suburban and rural populations. So, even within a single state, the hospital market is not uniform. It's a collection of distinct regional ecosystems. Now, in terms of scale, the state has just under 300 hospitals supported by a workforce of nearly 300,000 employees, precisely 295,000. From a strategic standpoint, that workforce is one of the defining characteristics of hospital sector. Hospitals are not delivering care. They are sustaining a large and highly specialized labor infrastructure, and that comes with a cost implication. Total wages across the sector exceeds $22 billion annually, reflecting the labor intensive structure of the hospital operations. Now, when you look at the growth, the market has expanded at a moderate pace, with revenue increasing at just under 3%. Precisely, it is 2.7% growth. At first glance, that may appear stable, but the more important insight is not just the growth itself, it is the relationship between revenue growth and cost growth. Because while revenue is increasing gradually, operating costs, particularly labor and infrastructure, are rising at a faster pace. This is the gap where much of the strategic tension in the hospital industry exists today. So, the Pennsylvania hospital sector is large, regionally diverse, and economically significant. But more importantly, it is operating under conditions where scale does not necessarily translate into financial ease. And that is where the deeper story begins. Because to really understand where this industry is heading, we need to look beyond the numbers and examine the forces driving these patterns. Now we talk about structural forces shaping this industry in Pennsylvania. What becomes interesting once you look beyond the surface numbers is how multiple structural forces are interacting at the same time. And these are not short term trends, these are long term shifts that are steadily redefining how hospitals operate. The first one is demographics. Pennsylvania has one of the older populations in the United States. There is 2.9% growth in population aged 65 and older, and that has direct implications for hospital demand. As the population ages, the incidence of chronic conditions like cardiovascular disease, cancer, complex metabolic conditions, and neurological disorders increase. These are not episodic care needs. They require ongoing management, specialist involvement, and hospital level interventions at various points. So, demand is not just increasing, it is becoming more complex. And that distinction matters because more complex patients require more resources, longer care pathways, and greater coordination across the system. At the same time, there is second force working in the opposite direction, and that is workforce pressure. Hospitals remains heavily dependent on clinical labor, and that model is under strain. Nursing shortages, physician burnout, and increasing reliance on contract staffing have all changed the cost structure of care delivery. This is not simply a staffing issue, it's a structural constraint. Because even if demand increases, hospitals cannot expand their capacity indefinitely if workforce availability is limited. So, what you begin to see is a system where demand is rising, but the ability to meet that demand is increasingly constrained by labor dynamics. Now, layer onto that a third shift, the movement towards outpatient care. Advances in surgical techniques, anesthesia, imaging, and post procedure recovery have made it possible to move a growing number of procedures outside the inpatient settings. This has been happening for years, but now it is accelerating at a faster pace. And it changes the role of hospital itself. Hospitals are no longer the default setting for all care. They are increasingly reserved for higher acuity, more complex cases, which means fewer routine admissions, but more resource intensive patients. That changes both clinical operations and financial dynamics. Another important force shaping the industry is reimbursement pressure. Hospitals operate within a mixed payer environment, and that environment is shifting. As the population ages, a larger share of patients are covered by Medicare. At the same time, government reimbursement levels remains constrained relative to the cost of delivering care, as there is minus 0.9% federal funding pressure in its programs. So hospitals are treating more complex patients under much tighter payment structure, and that creates ongoing pressure on margins. Alongside this, there is a gradual transition towards value-based care models, still evolving but directionally important because it shifts the focus from volume to outcomes, from episodic care to longitudinal care management. And finally, there is consolidation. Across Pennsylvania, as we discussed earlier, larger health systems have expanded their reach, acquiring hospitals, aligning with physician groups, and building regional networks. This is not just about growth, it's about survival in a more complex environment. Scale allows systems to spread costs, coordinate care, invest in technology, and strengthen negotiating position with the payers. But consolidations also reshapes competition. It concentrates market power and it influences pricing, access, and referral patterns across entire regions. So when you step back, what you see is not a single trend. You see a convergence of these external forces, increasing demand due to aging population, constrained workforce, changes in care shifting as more and more procedures are shifting towards outpatient settings. And there's evolving payment structures, like there's only 0.5% growth in privately insured population, but minus 0.9% in federal funding for Medicare and Medicaid. And above all, you see systems consolidating at a much faster pace. Individually, each of these would be manageable, but together they are fundamentally reshaping the hospital operating model. And that is what makes this moment strategically important because these forces are not temporary, they are structural, and they are defining how hospitals will function over the next decade. What defines the Pennsylvania hospital market more than anything else is not just its size, it is how strongly it is shaped by large health systems. This is not a fragmented market, it's a system driven market. Across the state, a relatively small number of integrated health systems control a significant share of hospital capacity, patient flow, and care delivery infrastructure. And that concentration has direct implication for how competition actually works. If you look at Western Pennsylvania, particularly Allegheny County, market is largely defined by the presence of UPMC and Allegheny Health Network. These are not just hospital operators, they are fully integrated systems with hospital networks, outpatient facilities, physician groups, and in some cases, insurance capabilities. This creates a different type of competition, and it's not hospital versus hospital, it is system versus system. And that system, that competition matters because when competition happens at the system level, it influences everything: referral patterns, network design, contracting strategy, and patient access across entire regions. Now, if you shift to Eastern Pennsylvania, particularly Philadelphia County, the structure evolves again. This region is anchored by the major academic centers such as Penn Medicine, Thomas Jefferson University Hospitals, and Temple University Health Systems. Philadelphia alone contributes over 15% of the state's hospital revenue, making it the single largest concentration of healthcare activity in Pennsylvania. So, what is distinctive about this market is the role of academic medicine. These institutions are not only delivering care, they are also driving clinical research, specialized services, physician training, and tertiary and quaternary care, which positions them as referral hubs for complex cases across the region. Now, when you move into central Pennsylvania, the structure becomes more distributed. Systems like Penn State Health, along with expanding regional networks and selective presence of a larger systems, serve a mix of suburban and rural population. This creates a different strategic challenge: less density, more geographic speed, and a greater need to balance access with financial sustainability. Another important point, and this often gets overlooked, is how market share is concentrated at the county level. For example, Allegheny County alone accounts for over 8% of the hospital establishments in the state, making it one of the most concentrated hospital markets. At the same time, employment is also heavily concentrated in this county. It employs over 10% of the state's hospital workforce, reinforcing its role as a major healthcare hub. So, what you begin to see is a layered competitive structure where at the top level, large integrated systems competing across regions. There is also another interesting perspective. If we analyze Allegheny County in depth, it stands out with the highest number of establishments, about 24 hospitals, but showing essentially 0% growth in the most recent year. So, what that suggests is not necessarily stagnation, but a mature and highly consolidated market where expansion is happening within existing systems rather than through new hospital openings. In contrast, counties like Lycoming County show a different pattern where over 10% of growth in establishment was witnessed between 2024 to 25. It indicates a localized expansion in the market where capacity development is happening. At the same time, we see a similar zero growth pattern in Philadelphia, Delaware, and Erie counties. These are large, well established healthcare markets, and the absence of new hospital establishments likely reflect structural stability, high capital barriers, and strong presence of dominant health systems rather than lack of demand. So, at the regional level, dominant players are shaping local access and referral patterns, while at local level, variations in density, population needs, and financial stability is playing significant role. From a strategic standpoint, this kind of structure creates both advantages and challenges. From a strategic standpoint, this kind of structure creates both advantages and challenges. Large systems can coordinate care more effectively, invest in advanced clinical capabilities, and expand into outpatient and specialty networks. But at the same time, consolidation raises important questions. How competitive are these markets? How does pricing behave in highly concentrated regions? And how does consolidation affect access, particularly in rural areas? And these are not just theoretical questions, they directly influence how healthcare is delivered and financed. So, the Pennsylvania hospital market is not just large, it is structured in a way where a few dominant systems shape the entire ecosystem. And understanding that structure is essential for anyone thinking about hospital strategy, partnerships, or expansion within the state. The scale of the Pennsylvania hospital sector can create the impression of strength, and in one sense, that is true. This is nearly $69.4 billion market with close to 295,000 employees and more than 22.8 billion in wages. But scale should not be confused with a comfort because the central story in hospitals today is not revenue alone, it is the margin pressure. Revenue in Pennsylvania hospitals grew at roughly 2.7% annually over the last 5 years, while wages grew at about 2% annually. Employment grew 1.4% over the same period. At first glance, that may sound manageable. But the deeper issue is that hospitals are absorbing much more than wage growth alone. They're also carrying the cost of contract labor, technology upgrades, compliance requirements, supply chain volatility, and infrastructure expansions. So the financial pressure is cumulative, and now labor remains the single most important cost story. In Pennsylvania, average hospital wages are about $77,402, which is actually 7.3% below the national hospital industry, which is $83,461. That point matters for two reasons. First, it suggests Pennsylvania hospitals are operating in a state where wage levels are meaningful, but still somewhat below the national benchmark. Second, even with that relative wage advantage, labor still consumes about 32.9% of the hospital revenue in Pennsylvania. So, when hospitals face nursing shortages, recruitment challenges, or retention pressure, even small disruptions quickly become financially significant. And there is another financial pressure comes from the payer mix. Pennsylvania hospitals, like hospitals nationally, are deeply exposed to Medicare and Medicaid dynamics. One of the key external driver in this market shows federal funding for Medicaid and Medicare declining by 0.9%, while the number of adults aged 65 and older are rising by 2.9%. That combination is strategically important. It means demand is rising in the very population most likely to rely on public reimbursement, while the funding environment is becoming tighter. That is exactly the kind of imbalance that creates long term pressure on hospitals. The privately insured population, by contrast, is growing only 0.5%. So the commercially insured base is not expanding fast enough to fully offset the reimbursement pressure coming from demographic change and Medicare and Medicaid pressure. This is where hospital strategy becomes much more complicated because leaders are not just trying to grow volume, they are trying to preserve financial sustainability while the reimbursement mix shifts in a less favorable direction. So there is also a geographic dimension to this pressure. Philadelphia County generates the highest hospital revenue in the state at $10.7 billion, while Allegheny County follows at $9 billion. Cumberland County, which is especially relevant locally, contributes about $1.9 billion in hospital revenue and supports more than 10,000 hospital employees. And this employee cost is around $820 million in wages. That local perspective matters because it reminds us that hospital economics are not abstract statewide averages. They play out in real counties, real labor markets, and real delivery systems. Really, the question becomes even sharper. Which markets have enough scale, payer strength, and system support to remain resilient, and which ones may face increasing strain? Another important indicator is productivity. Revenue per employee in Pennsylvania hospitals is about 235,000 compared with the national figure that is slightly higher. At the same time, Pennsylvania hospitals average about 990 employees per establishment. So this suggests hospitals are operating at substantial scale, but not necessarily with unlimited efficiency gains ahead. This suggests hospitals are operating at substantial scale, but not necessarily with unlimited efficiency gains ahead. And that's why many systems are so focused on outpatient expansion, digital workflow improvement, and redesigning care models. From a strategic standpoint, the issue is not simply cost cutting, it is structural redesign. And the hospitals are trying to preserve access, maintain quality, support workforce stability, and absorb capital investment needs. This all is happening while reimbursement remains constrained and the clinical burden becomes more complex. And that's a real financial story. Pressure is not coming from one place, it is coming from labor market, payer mix, demographics, and operating complexity all at once. And that is exactly why hospital leaders are being forced to think beyond traditional hospital management. They are being pushed towards broader system strategy. When you put all of these pieces together, the scale of the market, the structural forces, the system driven competition, and the financial pressure, a few clear strategic signals begin to emerge. And these signals matter because they shape how healthcare leaders should think about the future of the hospital strategy. The first is that hospitals are no longer operating as isolated institutions. They are evolving into integrated care platforms. And that shift is not theoretical, it is a direct response to the pressure we have discussed. When labor costs consume roughly one third of the hospital revenue and reimbursement growth remains constrained, hospitals cannot rely on inpatient services alone to remain sustainable. They have to expand beyond the hospital. Outpatient networks, physician alignment, ambulatory surgery centers, and population health programs. They are no longer optional. They are becoming central to how care is delivered and financed. A second implication is that scale is becoming increasingly important. In a market where capital investment requirements are high, workforce constraints are persistent, and technology adoption is accelerating, only larger systems have structural advantages. They can spread cost across multiple facilities, invest in advanced clinical and digital infrastructure, coordinate care across regions, and negotiate more effectively with payers. This helps explain why consolidation continues across Pennsylvania and nationally. But scale also introduces complexity. Large systems must manage integration, maintain quality across sites, and ensure that growth does not dilute operational performance. So, scale is an advantage, but it is not a guarantee of success. And there is a third implication which involves care model redesign. As outpatient care continues to expand, hospitals are being repositioned within the care continuum. They are increasingly focused on high acuity services, complex surgery, critical care, and advanced specialty treatment. Meanwhile, a growing share of lower acuity care is moving outside hospital walls. And this shift is reinforced by both clinical innovation and financial incentives. So, the strategic question is not whether hospitals should expand, it is how they redesign their role within a broader, more distributed care model. And there is another important implication, which is workforce strategy. With employment in the Pennsylvania hospital sector approaching around 295,000 workers, even small change in workforce availability or cost structure have significant system-wide impact. This means hospitals must move beyond traditional staffing approaches. They will need to redesign care teams, leverage advanced practice providers, incorporate digital tools into workflows, and rethink how care is delivered across settings where workforce is no longer just an operational issue. It is a strategic priority. And finally, there is an issue of financial resilience. When you have a system where demand from the 65 plus population is growing at nearly 3% annually, public reimbursement pressure is tightening, and labor remains a dominant cost driver, then financial sustainability becomes a central strategic challenge. And hospitals cannot rely on volume, they need cost discipline, efficient care models, strong payer strategies, and careful capital allocation. From a strategic standpoint, the organizations that succeed will not necessarily be the ones that grow the fastest. They will be the ones that adapt the most effectively. So, what we are seeing in Pennsylvania is not just industry growth, we are seeing an industry repositioning itself. Hospitals are becoming systems, systems are becoming platforms, and platforms are increasingly responsible for managing care across entire populations. If these shifts continue, what does the future of the hospital sectors actually look like? If we look ahead, the direction of the Pennsylvania hospital sector is becoming more clear. Demand will continue to grow, but the way care is delivered and how hospitals operate will continue to change. The first trend is sustained demand driven by demographics. The population over 65 is growing at close to 3% annually, which is a meaningful driver of hospital utilization over time. This is not a short term spike, it's a structural shift. And it means hospitals will continue to see increasing demand for complex, resource intensive care. But demand growth alone does not define the future. There is a second trend, which is site of care shift. A growing share of procedures will continue moving into the outpatient and ambulatory settings. And this is being driven by both clinical innovation and economic interventions. For hospitals, that means a narrower but more intensive role, fewer routine cases, more high acuity, high complexity care. And that changes both staffing models and cost structures. And there's a third trend, which is digital enablement of the care delivery. Hospitals and health systems are investing in data analytics, remote monitoring, care coordination platforms, and increasingly artificial intelligence. And these tools are not just about efficiency, they are about managing patients more proactively, identifying risk earlier, reducing avoidable admissions, and improving outcomes across the continuum of care. And over time, digital capability will become a key differentiator between systems. There's another trend that is likely to continue, which is consolidation and network expansion. As financial pressure persists, smaller hospitals, particularly in lower volume or rural areas, they may increasingly align with larger health systems. And this is already happening. This will likely to continue. The reason is that because scale provides access to capital, operational support, and broader care networks. But at the same time, it also means that healthcare markets may become more concentrated, and that raises ongoing questions around competition and affordability. And finally, there is evolution of payment models. While fee for service remains dominant, there is a continued movement towards value based care structure. And even gradual shifts in this direction can have meaningful strategic impact because they change incentives, they reward coordination, they reward outcomes, and they push hospitals to think beyond individual episodes of care. So when you combine these trends, the future of hospital sector becomes more defined. Demand will increase, care will become more distributed, technology will play a larger role, systems will continue to consolidate, and financial discipline will remain critical. Hospitals will not become less important, but they will become more specialized, more integrated, and more strategically complex. And that leads to the broader reflection. Because the real significance of these trends is not just where the industry is going, it is what these changes require from healthcare leaders.